You guys know him as one of the most revered figures in all of investing, Mr. Warren Buffett. He's considered a money mogul. He's got a track record of routinely making smart moves with his assets. And regardless of how good your returns are, how wisely you've crafted your own stock market portfolio, Buffett has made more cash and he's gained more credibility than virtually any other investor alive today. And that's why when Warren made a $1 million bet 10 years ago, back in 2008, the investment world sat up and took notice of that. I want to talk today about what that bet was, who ended up winning, and most importantly, what are we as consumers and viewers of this video able to learn through this novel exercise of taking risks in the stock market. So that's coming up next. Stick around. Hey guys, welcome back to the VIP Financial Ed channel. This is Matthew Pillmore. I'm your cash flow coach. Today we're going to be looking at the Warren Buffett Bet. There's a website that lets rich people place public bets on the performance of certain stocks or even the entire market as a whole. And that site is called longbets.com. And it's where Warren Buffett laid down the gauntlet back in 2008. He made a public declaration that raised the stakes in the world of managed investing. And Warren's bet looked like this. He was convinced that in 10 years, from 2008 to 2018, the S&P 500 would outperform the specific portfolio of aggregated hedge funds. Warren Buffett was basically saying this: over a 10-year period, passive investors that buy into index funds that pay low fees are going to net more profits than investors who pay high fees for actively managed funds. And he bet over $1 million, and that bet was actually met by hedge fund investment firm Protege Partners LLC. That in a public letter to Warren Buffett, they stated that he was flat out wrong. And in fact, they used the exact word wrong. Now, I don't know about you, but I'd have a hard time sleeping at night if I made $1 million bet with the most sought after investor that the world has ever seen. But the hedge fund managers at Protege Partners were so convinced of the value that their fund management would provide that they gladly put the $1 million on the line, and they waited. And before I tell you who won the bet, let's go ahead and talk about the kind of hedge fund that Warren was betting against here. Generally speaking, hedge fund investment firms and strategic securities brokers that charge performance-based fees for their gains, for the gains their investment produces for investors. What makes hedge funds attractive for some is the same reason why they're inaccessible for others. And they require large investments over long periods of time. But the fund that Warren bet against in 2008 was actually a fund of hedge funds that made it especially costly to invest in, and there were multiple layers of fees that were associated with it. So Buffett's bet that the steadily climb of the US stock market would more than make up for the exorbitant fees that were charged by the hedge fund managers, and as it turns out, he ended up being right. From 2008 until the mid-2017 year, the S&P 500 rose from 675 points to nearly 2,400. However, the fund of hedge funds that Warren was betting against actually netted growth for investors that wasn't nearly as profitable for those who invested in exchange-traded funds during the same exact time frame. And this overwhelming performance of the hedge funds was due to the fees on top of fees that were deducted, a cost of doing business that ended up being far more than it was worth comparatively. So Warren Buffett won the bet. And in an investor's letter he actually sent out in 2017, he proclaimed the win alongside a single sentence: performance comes, performance goes. Fees never falter. The more than $2 million net stakes of the bet were donated to Girls Incorporated of Omaha, and Protege Partners were left eating humble pie. Now, what's the takeaway? Is there a lesson to be learned from all this, from the bet that Warren Buffett made back in 2008? I think there is. With as many great opportunities as there are to access low-fee index funds, there's absolutely no reason to pay a fund manager 3% or more annually for the mere pleasure of taking your money. And I believe that hedge funds have a place in the investing world, but that place is going to be best reserved for high net worth individuals who don't need access to their money in investments for a very, very long time. So just think about it. If you were a millionaire back in 2008, you decided to invest equal amounts in the high fee hedge fund and the S&P 500. The S&P 500 would have won out, and your hedge fund manager would have only ended up shrugging his shoulders and basically saying, hey, better luck next time. And then he'd be laughing all the way to the bank. And that would be with all your money that he collected in fees. So the stock market's been a turbulent place, to say the least, lately. We saw record losses back on Christmas Eve. We saw, though, that it rebounded back in recent weeks. We're still seeing massive swings up and down, record swings. And with this uncertainty, with this sort of volatility in the market, it's especially important to make the smartest moves you possibly can. And that's why the biggest takeaway from this is you've got to look to proven experts. We live in a wonderful time of shared knowledge. And the beautiful thing is that, we're a lot closer to experts than we've ever been before in any field we want. So whenever the stakes are high, whenever you know that a decision you're about to make will have years-long impact on you, look to proven experts for the knowledge on the best paths moving forward. That's why we started VIP Financial Education over a decade ago, to be the experts on maximizing your credit so you can actually gain access to massive capital, and then you can use money intelligently, use leverage the way it was meant to be used, so that you're not later swimming in debt, wondering how you're going to make even just your minimum payments every single month. It all boils down to how much is left at the end of each month. So we wanted to pass on the knowledge and experience that we've gained and that we continue to gain over the years through our interaction with each and every one of you. And the goal still exists today. And if you're uncertain about the future and how you'll come out financially within these turbulent times, then head over to the freecoachingcalendar.com website. Take a look at the options that are there. You can reserve a free one-on-one coaching session that we extend as a gift, as a thank you for being a viewer here on the channel. So we give each and every one of you one opportunity to have that. The most common feedback I get from those one-on-one coaching sessions is, I got so much more than I expected I would get. This is not our opportunity to try and sell you something, folks. This is our opportunity to see what you've been missing out on and how much further along you could be if you were to make small adjustments to your behavior. Now, we do have an opportunity where you can grab one of our quick start vacancies. Quick starts are limited, so they are always based on a first come, first serve procedure. And the question that I would have for today's comments, and also of course for the contest that we run each and every week for $25 Amazon gift cards, is where do you think the stock market is heading next? I'm so interested to know whether or not you're confident that the current bull market is permanently receding here, or do you feel more optimistic that a recovery and ongoing bull market is going to continue? Go ahead and share below your feelings. Give me your own predictions. I'm very excited to know where you speculate things are going to go. Make sure you subscribe for more great content. Turn on those post notifications by hitting the bell after you subscribe so that you can continue to be notified as new videos are dropped on this channel each and every week. And that also, again, makes you eligible for the $25 prize each and every week. God, it feels good to win something. I'm going to tell you something though. It feels even better to win something you can cash in. I mean, yeah, I like looking at that, but it's even more fun to spend something like this. So congratulations to our first set of winners today. The first one that responds to this alert, to this announcement, is the one that gets to claim this awesome $25 Amazon gift card. And you can use it for anything you want, friends. So the three winners racing to claim today's $25 Amazon gift card is Emily Cenatiempo, Kelley Johnson, and Lisa Neville. Please check the description below for proper spellings, as pronunciations isn't my specialty. The first one of you that gets to the email contest at VIPfinancialeducation.com and emails us will claim this prize. The race is on. So we'll look forward to seeing you guys on the next video. Until then, make it a great day today and take care.